What if I told you the wealthiest investors don't play the same stock market game you do? Imagine stepping into a world where money doesn't just grow. It multiplies in ways most people never see. Behind the flashing charts and crowded trading floors, the super rich are quietly using strategies that bend the rules of the game. Picture Wall Street buzzing with energy, brokers shouting, screens glowing red and green, fortunes made and lost in seconds. Yet in the background, billionaires sip champagne, their wealth rising even when markets fall. They aren't gambling. They aren't guessing. They're following a hidden playbook designed to protect and expand their fortunes. By the end of this video, you'll know exactly how billionaires shield their money, grow it faster than inflation, and how you can borrow pieces of their strategy for yourself. This isn't envy, it's empowerment. Welcome to Wealth Pal, a place where future exceptionally successful and wealthy individuals gain an unfair advantage. If you haven't yet, hit that subscribe button and turn on notifications so as to never miss out on a future life-changing video. Without further ado, let's get right into it. The wealth gap is growing wider every single year. Ordinary investors often follow the same advice repeated on TV or in blogs: buy index funds, hold for the long run, and hope for the best. But the truth is the super rich are playing a different game entirely. They use advanced strategies that most people never hear about, and those strategies give them a huge edge. This isn't about wild theories or secret clubs. These are documented methods used by hedge funds, family offices, and ultra-high net worth individuals. They have access to tools, networks, and opportunities that everyday investors rarely see. And while the average person reacts to headlines and market swings, billionaires quietly position themselves to win no matter what happens. That's why this matters. If you understand their playbook, you can stop chasing hype and start thinking like the pros who never leave wealth to chance. Now let's dive into the heart of the playbook, the hidden strategies the super rich use to grow and protect their wealth. These aren't tricks you'll find in beginner investing guides. They're advanced moves, often invisible to everyday investors, but once you understand them, you'll see why billionaires rarely panic when markets swing. Number 1. Leveraging debt as a weapon. The first secret is borrowing against assets instead of selling them. Imagine you own millions in stock. If you sell, you pay capital gains tax. But if you borrow against those shares, you get cash without triggering taxes. The rich use this to fund lifestyles, buy more investments, or even start new ventures. Elon Musk famously borrowed against Tesla shares to finance projects. For billionaires, debt isn't a burden, it's a tool. They treat their portfolios like collateral, turning paper wealth into usable money while keeping ownership intact. For everyday investors, this lesson is simple. Debt can be dangerous, but when used wisely, it can unlock opportunities. Instead of fearing loans, think of how borrowing strategically, like a mortgage for property or margin for safe investments, can help you grow without selling your best assets. Number 2, private equity and pre-IPO access. The second strategy is investing before companies go public. Ordinary investors usually buy stocks after the IPO, when hype drives prices up. The wealthy, however, get in early during private rounds. They invest in startups before the spotlight, often at a fraction of the eventual public price. Take Uber or Airbnb. Early investors bought in when these companies were still risky ideas. By the time the IPO arrived, their stakes were worth hundreds of times more. Hedge funds, venture capitalists, and family offices specialize in this. They don't wait for Wall Street bells. They create wealth before the crowd arrives. For regular investors, this world feels closed off. But there are ways to peek in: crowdfunding platforms, angel investing networks, or even private equity funds that allow smaller buy-ins. The lesson? Don't just chase hype. Look for opportunities before they hit mainstream headlines. Number 3, hedging with options. The third strategy is hedging with options. Hedge funds use puts and calls to protect against losses. Retail investors often avoid options, thinking they're too complex. But for the rich, options are insurance. Imagine owning a stock worth $100. You fear a downturn, So you buy a put option that lets you sell at $95. If the market crashes, your losses are capped. Billionaires use this constantly, shielding portfolios from volatility. They don't rely on luck, they engineer safety nets. For everyday investors, learning basic options can be a game changer. Protective puts or covered calls aren't gambling. They're ways to reduce risk. Think of it like buying insurance for your car. You hope you won't need it, but it saves you when disaster strikes. Number 4, global diversification and offshore accounts. The fourth strategy is spreading wealth worldwide. The super rich don't keep all their money in one country. They diversify across continents, currencies, and industries. This shields them from local crashes, political instability, or currency devaluation. They also use offshore accounts and trusts. While this often sparks controversy, the goal isn't always secrecy, it's protection. By placing assets in tax-friendly jurisdictions, they reduce exposure to local laws and maximize efficiency. For everyday investors, global diversification is possible too. International ETFs, foreign stocks, or even real estate abroad can broaden your safety net. The lesson? Don't let your portfolio depend only on your home market. The world is bigger than one country's economy. Number 5, dividend capture and cash flow focus. The fifth strategy is focusing on dividends. While many chase growth stocks, billionaires love steady cash flow. Warren Buffett's Coca-Cola investment is legendary. He earns billions in dividends every year without selling a single share. Dividends provide stability. They can be reinvested to compound wealth or used as passive income. The rich often build portfolios around companies with reliable payouts, treating dividends like rent checks from their investments. For everyday investors, dividend stocks are accessible. Look for companies with strong histories of paying and increasing dividends. Over time, reinvesting those payouts can turn small investments into large fortunes. The lesson? Cash flow matters more than hype. Number 6, information advantage. The sixth strategy is having better information. This doesn't mean illegal insider trading. It means access to research, networks, and private data. Billionaires hire analysts, lobbyists, and consultants. They attend closed-door meetings, gaining insights long before the public. Retail investors rely on free apps or news headlines. The wealthy rely on custom reports and private intelligence. This advantage lets them act faster, smarter, and with more confidence. For everyday investors, the takeaway is to upgrade your information sources. Read company filings, follow industry reports, and learn from credible analysts. Knowledge is power, and while you may not have billionaire networks, you can still sharpen your edge. Pulling it together, each of these strategies shows one truth: the super rich don't gamble. They design systems that protect wealth while creating growth. Debt becomes a weapon. Private equity creates early wins. Options shield risk. Global diversification spreads safety. Dividends provide steady cash flow. And information sharpens every decision. For ordinary investors, the key isn't copying billionaires exactly. It's adapting their mindset. Think long-term. Protect your downside. Seek opportunities before hype. And always value knowledge. When you start thinking like the wealthy, you stop reacting to markets and start controlling your future. That's the hidden playbook, and now it's in your hands. Psychology of the super rich. The strategies of the wealthy are powerful, but their mindset is what truly sets them apart. Billionaires don't think in weeks or months. They think in decades. Where most investors panic during downturns, the super rich see opportunity. A market crash isn't a disaster to them. It's a clearance sale. They buy when others are afraid, and they hold when others chase quick wins. Another key difference is focus on preservation. The wealthy know that keeping wealth is harder than making it. They build layers of protection around their money, ensuring that even if one investment fails, their fortune remains secure. They don't chase flashy gains or gamble on hype. Instead, they prioritize stability, compounding, and patience. For everyday investors, this psychology is just as important as the strategies. Think long-term, stay calm in storms, and remember, wealth grows slowly but surely. Actionable takeaways. Now that you've seen the playbook, let's talk about what you can actually do. You don't need billions to borrow the mindset of the super rich. Start simple. Focus on dividend stocks, companies that pay you steady cash just for holding their shares. Reinvest those dividends and watch compounding quietly build your wealth over time. Next, learn the basics of options. Protective puts or covered calls aren't complicated once you understand them, and they can shield your portfolio from sudden drops. Think of them as safety nets, not gambling chips. Most importantly, think long-term. Don't panic when markets dip. See downturns as chances to buy quality assets at a discount. And remember, preservation matters as much as growth. You may not be a billionaire, but you can borrow their discipline, their patience, and their focus on strategy over luck. That's how everyday investors level up. The super rich don't gamble, they strategize. Every move they make is calculated, every risk carefully managed, and every opportunity weighed against decades of experience. Now you've seen their playbook: leveraging debt, investing before IPOs, hedging with options, diversifying globally, focusing on dividends, and sharpening their information edge. These aren't tricks reserved for billionaires alone. They're lessons you can adapt, mindsets you can borrow, and habits you can build into your own investing journey. So here's the challenge. Don't just watch the markets, start thinking like the wealthy. Protect your downside, stay patient, and let compounding do its quiet magic. If this opened your eyes, hit like and hit that subscribe button, because I'll be breaking down more wealth-building strategies in future videos. And trust me, you won't want to miss those as well. Also share your thoughts in the comments below and share this video with someone who needs to see it. The game is changing. Are you ready? Until next time, thanks for watching and see you in the next video.